I'm Nicholas Bornodis, President of Capital Link, and I would like to welcome you all to another very interesting panel. China, among other things, has been a destination of choice for the international shipping community that has been raising financing and capital through Chinese leasing options. So this panel features 5 major international shipping groups, and we are going to discuss how they are fitting the Chinese leasing options within the overall range of available options that they have to raise capital in China and beyond. And we have with us Jonathan Silver. He is a partner at Maples Group in Hong Kong, and Jonathan is going to moderate the discussion. So I would like to thank you all for being with us, and Jonathan, I turn over the floor to you.
Thank you, Nicholas. Hello and welcome. My name is Jonathan Silver and I run the Asia Shipping and Ship Finance team at Maples Group. The panelists with me today are Evangelos Chatzis, CFO of Danaos Corporation, Harald Gurvin, CFO of Flex LNG, Jeffrey Pribor, CFO of International Seaways, Vikram Hiranandani, Director of Corporate Finance at Scorpio Bulkers and Scorpio Tankers, and Christos Begleris, Co-CFO of Star Bulk. I'll ask each of the panelists to introduce himself and his company in a little more detail once we begin our discussions. I'd like to start by thanking Nicholas, Annie, and everyone at Capital Link for the invitation to moderate this panel discussion. The subject of our panel today is International Ship Owners Raising Capital in China and Beyond, Chinese Leasing and International Finance Options. Just a very quick word on the Maples Group before I begin. The Maples Group is a global service provider offering legal services through its international law firm, Maples and Calder, on the laws of the British Virgin Islands, the Cayman Islands, Ireland, Jersey, Luxembourg, and the Marshall Islands, where I'm qualified. The group is also an independent provider of fiduciary, fund services, regulatory and compliance, and entity formation and management services. Currently, we have over 2,000 lawyers and professionals based in 18 offices located in the Americas, Asia, Europe, and the Middle East. So let me start with a very quick summary of the growth and evolution of the PLC leasing industry from my own experience. The very first deals I worked on as lead counsel when I was at an onshore law firm were really quite basic and supported with residual value guarantees, RVGs. Mainly using aircraft leasing, RVGs, as a base. To explain, there were no legal precedents for sale and leaseback structures 10 years ago when we started. Over time, the finance leases became more sophisticated, but the China Banking Regulatory Commission, CBRC, their regulations back then prevented PRC finance lessors from debt financing their leases with their own domestic banks. And indeed, the Western banks were still very cautious. That's all changed. Today, we see a range of operating lease and finance lease structures, and indeed hybrids, many of which are ultimately financed by both international and domestic PLC banks. The PLC lessors have now also taken advantage of JOLs, Japanese operating leases, and JOLCO structures, and indeed pure operating leases. I'm sure we will see still further evolution in time. Our discussions today will concentrate on the various financing options available to international shipping companies. And indeed, our discussions are intended to cover the panelists' own experience and their own feedback on PRC leasing options. Let's move on to the questions. Kicking off, if I may, with Vikram. Vikram, you've done a very significant number of Chinese leasing deals since 2017. Perhaps can you tell us how much is the total amount, and do you have any details which you can share with us?
Absolutely. So we did our first Chinese leasing deal back in April 2017, and this was done at Scorpio Tankers. It was an operating lease set up on 3 MRs. And then shortly thereafter, we really expanded in this market, partly due to the Navigate acquisition, which happened over the summer and the fall. So we inherited another $460 million of exposure during that time as part of the acquisition. And then shortly thereafter, within the same year in 2017, we did another sale leaseback for 5 ships, around 112 million in total. So the first year we tapped into the market, which was back in 2017, we raised over $600 million at Scorpio Tankers. And then in 2018, at Scorpio Tankers, we did sale leasebacks with 6 different Chinese lessors, around 32 product tankers, and almost 800 million of leasing debt. So we continued the expansion in that space to access capital. And then in 2019, we started tapping into this market for Scorpio bulkers. And we continue to do, some leasing deals even at Scorpio Tankers, particularly relating to scrubber financing. But at Scorpio bulkers, we did 13 ships with 2 different Chinese lessors, and it was around 240 million in total. And so, fast forward to today, like currently, we have around $1.7 billion of leasing debt with Chinese lessors, at Scorpio Tankers, and a little over 230 million at Scorpio bulkers. So between the 2 companies, it is around $2 billion. And this is including the, undrawn scrubber financing. So basically committed for any financings. So almost $2 billion of Chinese leasing debt across the 2 Scorpio companies. And if you talk about the number of vessels, currently it's around 72 product tankers and 13 dry bulk ships that are financed by Chinese lessors. And majority of them are all, basically finance lease. We only have 3 operating lease under Scorpio Tankers, but everything else is finance leased.
Thank you very much. Moving on to Christos then. Christos, perhaps I could just ask you to give us a little background on your company. And also, could you tell us a little about your experience in financing in China and indeed Japan?
Thank you, Jonathan. Starbulk is the owner and manager of 116 dry bulk vessels, from Supramaxes to Newcastlemaxes, and by market cap is the largest owner listed in the US, although still only 1% of the total dry bulk fleet, as we're operating in a very fragmented industry. We have dealt with China for a very long time. The first transaction that I was involved in was back in 2010 with the financing of Suezmaxes from China Exim Bank. And then at Ocean Bulk,
to assume the Sinosure wrapped Bank of China XM loan that was originally done for someone else, for Generate, which ordered the ships in China. But we demonstrated to those lenders and the agency that our legacy was one of building ships in China and that we would be back. And they accepted that on a relationship basis. In fact, they remembered our CEO, Lois Zabraki, from when she was just head of international product tankers at OSG from 4 or 5 years previously, and said, we'll be back, and we came back. And so we fought hard to keep that relationship and transport it over to Seaways from Generate, and we're proud to have that. It's important to have that. And you mentioned the capital markets. Oh, well, leasing, importantly, I said before, we don't yet have a Chinese leasing instrument in place. We looked hard at it. It didn't work with our previous balance sheet, but it will with the one we have now. That replacing the Term Loan B with traditional Scandinavian bank gives us more loans, gives us more flexibility to do that. So we expect that to be part of our, and we would want it to be part of our diversification of financial sources. And finally, you mentioned capital markets. I think, we're public, that's generally a positive thing. It'd be nice to think about issuing equity. I live in hope is the phrase I think of, that we might trade above NAV. I think whether it's dry bulk or tankers, I know those both the best. It's relatively infrequent that our stocks trade above NAV, but it's a very good instrument to have available to you at the right time. But equally, public opens up the capital markets on the debt side as well. It makes raising money in the bond market, whether it's the institutional bond market in Oslo, the U.S., although it has a high minimum size, or the U.S., the so-called baby bond and preferred markets, where we haven't raised debt. I know Vikram and those have as well. So it's good to have all those as options.
Okay, that's very kind. Thanks. We've not got long left, but I'd like to ask Evangelos. If Evangelos, I understand you had some problems with the sound. Can you hear me now, Evangelos? No. Okay. Well, maybe if we can come back to Evangelos in a minute, if we can sort the sound out. Harald, just a quick question for you. Do you find that sector-specific knowledge is an important element of the lessor's role? Should they have a good in-depth knowledge of your own specific sector?
Yeah, I think sector-specific knowledge is important for anybody involved in ship finance activities, as the markets are notoriously cyclical, and in addition, in the LNG space, you've had a massive technological leap, and also a change in the sort of underlying market, which is LNG. You've on the vessel side, we've gone from building from the dinosaurs, building steam vessels up until the mid 2000s to really being at the forefront of the technology with the latest generation dual fuel 2-stroke slow speed engines. Also increased vessel size, lower boil off and everything. And then on the LNG market, so that's sort of gone from a more liner trade with 20-year contracts to LNG becoming a commodity and really a functioning spot market for LNG vessels. So you see a lot of the banks, they're still stuck with wanting to finance 20-year contracts, full payout, but those contracts don't exist anymore. So for us, it's been both doing traditional bank financing, ECA financing, and Chinese lease financing. It's of course a teaching process. We've managed to do all the financing without any requirement for employment. But I would say with China, being one of the largest and fastest growing importers of LNG, I would say they definitely have in-depth knowledge of that market. So it's been a positive experience.
Thanks, Harald. Let me just, we've only got a tiny bit of time left. Evangelos, I wonder if I could ask you, what are your key considerations when deciding on which PLC lessor you want to transact business with? No, I think no. I think, gentlemen, the time is pretty much up now. So I think just to wrap up, I'd like to thank you all for your input today, and thank you very much.
Thank you, Jonathan.
Thank you, Jonathan.
Thank you, Jonathan.